Hello traders, this is Daryl and I'm going to go through a divergence entry scenario. Now this happens to be in the New Zealand dollar, Canadian dollar, and it's obviously an historical chart from I believe last week. But there's a lot of good examples in this setup to give you options for entries. So you see what might be favorable and something you might be able to use. So we obviously have, first off, we do have divergence here, and this is regular bearish divergence. It's not hidden. It's not considered hidden. So it goes down on the stochastic and goes up on the actual price. Now, two things about this. Well, first off, let me cover this. All right, so if I go to, well, if I had, okay, swing points. Oh, fractals marked on here. Sorry, a bit of a brain fart there. If I had fractals marked on here, these would obviously be highs up here, and these would be lows here. This is obvious to see because you can just see the line coming up and down and up and down. So instead of getting all hung up with naming what type of divergence this is, which is what confused me for a long time. Let's see, is that hidden? Is that standard? Is it bearish? Is it bullish? Simply look at the peaks. So to make that more prominent, when you have peaks going up like this, then you obviously don't want to trade in the up direction. You know, this is obviously something you want to trade down, right? So anyways, that I know that sounds maybe oversimplified, but I know I've got tricked by it a few times. Let me see, that's supposed to be something else, so whatever. But anyways, so just look at that, and it's the same thing up here. If you were to draw lines to emulate what's going on in price, they would also verify that these are peaks right up here. Okay. All right. So I don't want to get hung up with that too much, but what I primarily want to do is show you some entry style techniques to look at with this. And what I would do, or what I have done in the past, is a couple different things. The first one is obviously go to a lower time frame to look for a better entry. But while we're up here on the 4-hour, let me add one more thing here, which you guys also, I know you use sometimes, and that's a trend line. And so we're looking also for, now these are all just confirmation tools, the divergence and the trend line, because none of these are actually any excuse me, any guarantee of what price is going to do, but there are certain things that you can apply in both of these situations. Okay, so let's start with the lower time frames. Okay, so this is a 4-hour chart, a New Zealand CAD. I think I mentioned that. So let's see what it looks like on a 1-hour chart. And let me get this back down here. We've got that kind of part out of the way. So this was a candle, a 4-hour candle. This was the height of it right here at 8 o'clock. Okay, so this is not confirmed as a high. Let me go back to the 4-hour for a minute here. This is not confirmed as a high until after the 4-hour candle closes. And if you're just looking at a 4-hour chart, that confirmation is not until the next 4-hour candle closes. That might be a bit of a long wait, and particularly like in this case, where the 4-hour candle dropped 56 pips, and on the New Zealand dollar, Canadian dollar, that's pretty big. It's very huge. It's the average bars here are nowhere near that range. So back to the 1-hour. let's see if we can figure out a better entry. Okay, just make this as easy to see as possible. Okay, so anyways, this was 8 o'clock. This is when this 4-hour candle opened. So that means it closed at 12. Well, this candle right here, this big pin bar, which is a big help, a lot of these will help you figure out that maybe there's a lot of sellers waiting up there. This pin bar up here closed at noon. So this is the actual official closing right here of the 4-hour bar in question. So that means that the 1 hour, you can use the 1 hour to put price into play to determine where you might want to make an entry. And the advantage of this is smaller stops. So also now we have a new trend line. Okay, and I'll cover these more in depth, but here's this trend line on the 1 hour. And an entry at the close of, say, this bar would not only break the trend line, but, well, it would break the trend line and also give us an entry that would give us about a 65 pip stop loss, which is still, it's still up there. It's still pretty high. And I'm not that interested in trading, particularly a pair like this with a 65 pip stop loss. So now, let me mark up this 1 hour bar here. That was the close of the previous 4-hour bar. Okay, hope that's not too confusing. So just to isolate this, so now let's go on down to, say, the 30 minute. We'll keep going down to figure out where we're at with this. Okay. All right. So this marks that 11 o'clock candle, 1100. And so then the 1100 candle closed on this candle right here. So this is the 1130 candle, and this is the 12 o'clock candle. So that means it actually closes at 12:30. Now, you can also maybe use that as a verification if you feel really, let me get this out of the way, if you feel really that might be your best entry because you like the pin bar, you like the divergence, then if you chose to use this close of the candle following the last 1 hour candle, then now your stop, instead of being 60 plus, is about 45, 48 pips, depending on your spread. So that's an improvement. And well, we can obviously see price went way down, but that's not what I'm talking about here. Just some ways to look at this and enter this. So now, let me see, we have the 12. Okay, so this was the 12. This is the 12, 11:30. So this is the actual, once again, this is the actual close of the 4-hour bar that we were initially talking about from over here on a 30-minute chart. So let's go down one more level. Let's say, look at this on the 15-minute level. Okay, so here's the 15. This was the 11:30 close. This was the 11:45 close. So now at this point right here, we have a new candle after the close. Well, I'm not crazy about using this as an entry because we really don't have too much confirmation. But we do also have another trend line here on the 15-minute. And this new trend line has several points that holds price up. I mean, price doesn't really touch it along here, but it's following this this general rise. Then we have the touch here. So this bar right here might offer you another entry if you go down this far to look at it. And now this is about the same. Yeah, this is the same as the 30-minute close. Okay, so anyways, here's some options to get in. And if you're just going for 1-to-1, you can have anywhere from a 65 to a 43 pip target, depending on where you would enter this trade. But then let's look at one other thing. Let's go back to, well, let's start right here, and I'll explain it here, and you can apply it also to higher time frames. The trend lines we've been talking about, the trend lines are something that has probably been around forever. But then there's a fellow named Tom DeMark that has put these to music, if you will, and he's decided that, or he has showed one way of doing price projections. So like if we're doing a simple 1-to-1 here, that's pretty simple to figure out. We're looking for about 47, 48 pips, but that's simply just one way to do it. Now his way of doing this is to take the high of this bar right here, the last fractal high, and take a line straight down to where the trend line crosses, which is 42 pips. So this is Tom DeMark's one way that Tom DeMark uses a price projection, using the trend line breaks as how far to go on targets. So in other words, this would be almost the same as a simple 1-to-1, but it's going to change on any and every divergence trade that you would encounter. So that's just another way to do it. And if we go back, see if I can do this without getting too messy. If we go back to this 1-hour chart and get rid of some of these lines here so it's a little bit easier to see. Okay. If we go back to the 1-hour chart, then this price projection from this high to this trend line directly below that is now 60 pips. So that would be the price projection on the close right here. On the 4-hour chart, it's right here. So that's going to be, even though we're looking at a 1-hour right now, so that would be more in the range of 75. So any way you slice this piece of pie here, there's a lot of different ways to figure out price projections. But the primary thing I was trying to demonstrate here is to look at various other methods to choose an entry. And you can use trend lines, you can just use candle closings, etc. Let me highlight this by highlighting this 4-hour candle area, which I think is here. Doesn't show up very well, does it? So let me see here, 11:15, 11:45, right? Okay, let me do this. All right, so this is the 4-hour candle. Okay, on the close of this candle right here is where we start looking for potential entries. And now we're down again to the 15 minutes. Sorry for skipping around so much here. So you could, at this point, if you want to use the 15, as I mentioned before, you can use this trend line break right here, enter on the close of this candle, and have a much tighter stop than entering anywhere down here. Either way, this would have worked out fine, but I just chose this example not because it was such a great winner, but because it was a great example to show in different time frames how you might analyze this and possibly help you figure out when and where to trade based on these things. Now, also I need to point out that with the original guidelines, this trade does not actually fall into that. The original ones put on page 1 by Reno because you can see right here, this high did not breach 80. So, if you're being very strict with those rules, then this would not be a trade either, because we did not have a breach of 80, at least on the 4 hour. Let's see, on the 1 hour, oops, let me just get rid of that. On the 1 hour, yeah, we did have a break of the 80 right here, but then again, it also went back down to the 20. So yeah, I mean, there's a lot of different ways to look at the price action. If you're staying on a 4 hour chart or higher, and usually even a 1 hour, you can get some pretty good ideas of price action, which you might use to enter. And that's going to be it for this one. Just fire any questions, or if anybody's got any ideas to increase this or make this better, or anything at all. If you don't like it, you can say that too. And so, anyways, that's it for now. Daryl closing out, and have a great trading week. This is the first week of the new month, July 2017. So I hope it's all great for everyone.